Hey, what's up, my friend? So, welcome back to this week's market analysis. So, since this week is the first week of June, right, what I usually do is to share with you, right, what's going on across in the financial markets, covering, stock, FX, bonds, gold, and whatsoever, right? So, this is to give you an insight to what's going on across the financial market. So, let's say you go to a cocktail party, someone asks you, how's the markets doing? And, you can, recall, what I've just said and just say, oh, the stock market is bullish, oh, euro dollar is bullish, oh, gold is bearish, and stuff like that. So, kind of make you look good, right? My job down here is to make you look good. So that's what we'll cover in this week's market analysis, and I'll see you there. Okay, so before we get to this week's video, I want to share with you is that I think some of you might know this, that over the last few weeks, right, and in the coming weeks and months ahead, I will be, publishing blog posts, right, on a regular basis, right. So, for example, this week we have the 12 proven forex trading tips that work, right. A week earlier we have currency trading for dummies. 2 weeks earlier we have the complete guide to stochastic indicator, and 3 weeks prior, or 4 weeks, we have the complete guide to ATR indicator. So you can see that every week, right, I have been posting out, useful trading content to hopefully, educate you and to make you a better trader. So if you want to stay up to date, whenever I publish a new blog post, which is once every week, like for example, this over the coming few weeks, we have, topics on chart patterns, swing trading, candlestick patterns, and stuff like that. So if you want to stay up to date whenever I publish a new post, right, just go up here, enter your email address, right, and click this orange button. You'll get this free copy of the ultimate guide to price action trading. And also, whenever I publish a new post, I will make sure that you are the first one, right, who is up to date, right? So you'll never miss a single post from me. Okay, so go ahead and do this right now, right? So you'll always be updated whenever I hit or publish a new post. So with that said, moving on back to this week's market analysis, right? The first pair that I want to talk about is a euro dollar. So euro dollar, just zoom out a little, you see that this pair actually, right, has made quite a strong decline, right, from the 125 area down into this 116 area, which is a area of support, right? Support, and here. And on, I think, Wednesday, there was actually what I call a false break, where the market tried to take out this prior low but didn't, and then actually rallied and close higher. So this to me is a sign of strength, right? Because the market has been declining steadily over the last few weeks, and traders are piling on short after short. So what happens is that when you have a strong bullish close against the downtrend or the downward momentum over the last few weeks, you can expect that if the market were to rally higher, right, this group of traders who are short, right, will cut their trade, especially those who are late to the party, late to the game, right? As the market reverses against them, right, traders will look to hit the stop loss because they are late to the party, the market has reversed against them, as well as traders who are having a trailing stop loss, right? It would hit their trailing stop loss, and then that would also fuel further price advance. Okay, so this to me, this setup is a setup that you can trade a false break. I set my stop loss, right, 1 ATR below this low, somewhere here, and I'm just wanting to see how much further this market can go. I'm just trailing my stop loss, right, on the previous day low. So for example, this candle over here was the previous day low. So the market didn't break and close below it. The moment the market break and close below this previous day low, I would exit my current position, right? So this is a long trade that I took on euro dollar with a long bias. And moving on, pound dollar. Okay, so this one isn't as bullish as euro dollar. In fact, this is quite bearish. If you just pull out the 20 MA, you notice that the price is still below this 20 period moving average. So the momentum is pretty strong towards the downside. And unlike the euro dollar, where you have a very nice strong price rejection at support, pound dollar not quite, right? The candles are relatively small, so you can see that the price rejection isn't really there. So to me, right, I would say, if the market is still below the 20 MA, if the buyers couldn't, push price higher, right, and if it's formed somewhat of a bearish flag pattern like this, where the candles are really small, the range are very tight, and then it continues trading lower, breaking this low, so right, this to me would be a possible trend continuation trade towards the downside. Okay, so this is for pound dollar, bearish on this for now. Aussie dollar, right, so if you look at this chart, right, it looks like pretty much a mess, right? Often, whenever you look at a chart and you ask yourself, hey, what the beep is this, right? What is it telling me? Very simple, right? Breathe in, breathe out, and scroll out your charts. Okay, you will get to see, a much bigger and clearer picture. So now that I've zoomed out, you can see that, hey, okay, now you pretty much, can sort of make sense what this market is doing. And you would realize that this market is somewhat in a long-term range, right? Or a weak trend. You can still see a series of, higher lows. And this one broke the previous low. But generally, right, it's a long-term uptrend. But also at the same time, right, you can conclude that, it's still also within a range, right? Very choppy range market, right? Range market. So that is kind of the big picture. So in this type of, market scenario or market condition, right, the thing that you want to do is, to trade off from the best levels that is on your chart. So from me, you can see right now that this market is around the 0.754 level, around that area. In fact, price has, break below this area of support, get back above it, break below it, get back above it. So it's just chopping around this area of support. And price action is choppy. And to be honest, right, if you want to stay out of this market, that is fine as well, because the market, as you can see, right, the trend isn't very obvious. It seems to be in a choppy uptrend. At the same time, you can also say that it's in a range. And on top of it, it's basically, chopping up and down above this area of support that I've highlighted. So again, if you want to give it a miss, right, I would say, why not, right? Why do you want to force a trade? There are, better trading opportunities out there, like, for example, pound-dollar trade that I just shared with you earlier. So Aussie dollar, if you ask me, right, I would say a pair that, it's perfectly fine to just walk away at this point in time. Dollar Canadian, right? So looking at dollar Canadian, this one again, just zoom out a little, see where or what the market is doing, and you can see that this market, again, right, just below this area of a previous support, turn resistance, right, and it's somewhat, again, right, just in the middle of this range over here, just chopping over here in the middle of this range. So if you ask me, again, another perfect reason to just, stay out of this trade. But one thing to share is that you notice that there is this swing low over here. So what could possibly happen is that, the market could be actually forming a build up over here before it breaks out higher. That could be a possible scenario. And one of the things that I like to share is, how to actually enter the breakout before the breakout is that if you go down to a lower time frame, it might be possible to get an entry. So for example, I'm on a 4-hour time frame over here, and let's say, right, this is actually an area of support on this time frame. So if this market can swing down lower, right, and then reject the lower prices and close, bullishly higher, this would be a valid false break setup to trade. And the beauty about this is that on the higher time frame, you've seen that this market is actually, forming somewhat of a build up over here. So if you can get long near the lows over here, and if the market does break out, right, you can see that you're pretty much, long from a very favorable position. In fact, this is somewhat almost near the lows already. So this is a possible scenario that could happen, and it's worth, keeping a lookout for dollar Canadian. Okay, another market I want to share is the dollar Sing. Okay, so this is very straightforward, right? So the dollar Sing, right, if you look back historically, the Singapore dollar has been, showing sign of strength. In fact, from the 2017 or late 2016, right, the Sing dollar has appreciated against the US dollar. So this is why you see this downtrend coming in, right? Series of lower lows and lower highs. But what's interesting is that from the start of 2018 to right now, the US dollar is now, pushing back and showing signs of strength, right? You can see that this over here was a potential accumulation stage that occurred, a range, right? This pair just, couldn't seem to get lower. In fact, right, you have a series of lower highs, right? A descending triangle, which actually favored the market breaking down lower, but it didn't happen. In fact, it rallied up higher, breaking above area of resistance, and now forming a build up above these highs. So this, right now, to me, is a possible sign of strength, because, you have a build up forming this above this area of resistance. So a possible setup that could happen is the market, right, consolidate and then continues to break above, forming the start of a new uptrend. So this is dollar Sing. This is a possible scenario where it could really be a start of a new uptrend. So pay attention to the dollar Sing market, right, because this setup is pretty much is developing well. Okay, so moving on, right, let's have a look at the stock markets, right? So we have covered the FX markets. Let's have a look at the stock markets, right? Let's look at the S&P 500. So S&P 500, right, again, I think equity markets generally long-term, they are bullish, right? I've said this, right, over and over again, and if you just pull out your 200 MA, okay, you can see that this market is still above the 200 period moving average. So your buyers, right, your long-term buyers should still be long, right? I mean, it's not wrong to be short, right? But you don't want to hold your short trades for too long, because generally the uptrend, the long-term uptrend, is still towards the upside for the S&P 500. So your bias is still towards the upside. And you can see, right, what's happening right now is that you have this potential build-up that is forming over here. So again, if you've been following me for a while now, you know that, a build-up at swing highs or area of resistance, this is a sign of strength, because it tells you that the market just couldn't, move lower, even though it's from an area of value, even though it's from an area of resistance or swing high. So this is a sign of strength, telling you that buyers are still willing to buy at this higher prices at this swing high. Okay, so there could be a possible, breakout in the coming days or weeks, right? And the market could possibly retest these highs or this one over here. And in fact, if you want to trade this bullish sentiment, right, I would say the Nasdaq is actually a better candidate, because if you look at it, right, it has actually broken out already, right? Again, a very similar setup. You have this build-up form over here, and in fact, for Nasdaq, if you look down at the 4-hour time frame, right, can you spot a pattern, right? A common pattern that I actually shared recently in one of my YouTube videos, right? Do you see this? What is this? An ascending triangle pattern, right? I actually talk about this pattern extensively in one of my recent YouTube videos. Go and have a look at it if you want to know how to trade it, right? So this is an ascending triangle pattern, right? This is a sign of strength, as it tells you that if higher lows, this one's a little bit void, but generally higher lows coming into this area of resistance, right? Buyers are willing to buy at this higher prices. So one can look to trade the breakout of this ascending triangle chart pattern, which is essentially, right, a build up on this daily time frame. Okay, so this is a sign of strength, a breakout on the Nasdaq, and possible to see the market retest back these highs, or even to break out higher. So one thing to note is that it might be a little late to chase the market right now. So one thing you can do is just to place a buy limit order and see if the market can retrace and to fill you on the trade. If not, right, just move on, right? And there are always trading opportunities elsewhere. Okay, and for those of you who are long on this trade, right, what you can do is to just trail your stop loss. Possible to trail it on the previous day low, or if you want, even on a higher time frame, right, on the previous week low. That is fine as well, depending how aggressive or conservative you want to be in riding the wave, all right? So this for Nasdaq, right? Didn't really intend to cover this, but since we talked about the S&P, I covered it a little. Having a look at bonds right now, look at a 10-year bond, right? You can see that generally, again, the bond market, it's in a downtrend, right? Because interest rates are slowly starting to creep higher, so this would negatively impact bond prices, right? So you can see that the bond market is in a downtrend. Buyers is to stay short, okay, and to stay short. So I think this was a possible setup, right, where the market traded higher above this highs, and this again is what we call a false break setup, right? The idea behind it is very simple. I think it's more obvious on the this is the 5-year, sorry. This is the 5-year treasury note, and the idea behind it is very simple. Is that whenever the market rallies aggressively, right? For example, let's scroll a little bit back in time. All right, you can look at this point in time. A lot of traders will look at this, right? At one point in time, you say, "Oh, look, man, this is the reversal, right? The reversal of this entire downtrend. Just look at how bullish these candles are. It's so huge." Right? And as the market break above this highs, they look at, oh, this breakout is real. Just look how big this candle is. I'm going long, right? And to buy the reversal, to hold this for a long time, and to hopefully see if the market can rally back up to the stratosphere. Right? This is the mindset of traders, right, who are chasing breakouts. And then what happened on the next candle? Bam, boom, boom, bam. Right? You can see that the market did a sudden reversal. Right, traders who long the breakout on this wick over here, and here are pretty much trapped, because they look at this and say, "Hey, what the beep is going on? Right? Why is the market reversing? Isn't it supposed to trade higher?" So now this group of traders who bought are trapped. Right? Where would they put their stop loss? Well, some of them could put it just below this candle low. Some accounts are too small, put it somewhere here, or some will put it just below this swing low. So as you can see, as the market were to reverse lower, it's going to hit this cluster of stop loss, which would actually induce further selling pressure. All right, so you can see that this market is trickling down already, and this is the idea behind the false break setup. This is a setup that I've spoken about repeatedly over and over again, because it flat out works. All right, and pay attention to this particular price pattern, and you can actually find profitable trading opportunities pretty regularly on a consistent basis, right? So this is the false break setup, again on the 5-year treasury note. We spoke about it on the euro dollar as well earlier, so have a look at it. But generally, bond market is in a downtrend. Looking at, let's look at gold, shall we, right? A little bit of metal. So for gold, right, generally this market, I'm bearish for now. Right, you can see that this market is in a range. Broke below this area of support, and now it's, retracing. So unless the market can break and close strongly back above this area of support, my bias is still towards the downside. Okay, it has not reclaimed back this area of support. So for me, right, gold still bearish, and what I'm looking for is that on a 4-hour time frame, right, it's possible to get a possible entry. You notice that there is a somewhat of a minier range or a smaller range on gold, and if the market can form a build up over here, right, and break down, that would be a possible setup to go short on gold. Okay, so still bearish on it, and we'll see how this one plays out. And again, silver, right, since we are on the topic of false break, I think we are discussing this pattern pretty in depth this week. So if you look at silver, notice that this market is pretty much also in a range, right? And if you look at it on a daily time frame, it can seem very difficult or even impossible to trade this range, right? Because the moment it goes up, it quickly swings down. The moment it swings down, it quickly goes up. How do you actually time your entry, right? Like for example, this candle over here, it comes down, the next candle it closes so bullishly. If you want to go long over here, you're already coming into this area of resistance. How do you trade silver? So one tip that I can share with you is that if you look, or if the market seems to move very fast, right? Like zoom, 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 you move so fast. What you can do, you can slow down the process by going down one time frame lower, right? One time frame lower. So if you look at this right now, same chart, same market, but just a different time frame, and it seems that the market right now has slowed down, right? You can see that there is actually ample time for you to get long, right, at this area of support, right? The market has slowed down. And again, how could you have traded, right? The false break pattern, right? Notice this one over here. Right, you have a false break again at this area of support, right, triggering below the stop loss below this lows, right. Again, another false break. No, you don't have. So this was the one that you could have traded. So again, oh, there's another one here. Okay, so there's another false break over here where the market break down, right, and then rallied higher. So right now you can see that this market, it's pretty much, I would say, in the middle of nowhere. So if you want to trade silver, again, just wait for a false break, and then before it to close higher, that would be a valid trading setup. So one thing to share is that this is just a specific setup and entry only. You still have to take into account your stop loss, your trade management, and it's outside the scope of today's video to discuss all this, the individual parameters or topic, right? So you can look through my past YouTube videos. I believe I've covered one or more of these topics at one point in time. So go ahead, look at it, and you have a better idea on how to actually manage your trades. Okay, so and last but not least, right, let's look at oil, right? Today's video running a little long. Right, oil, okay, you can see that generally, right, it's in an uptrend, right? Series of higher highs, higher lows. What I'm seeing over here is that the market tried to rally, then it got rejected over here. So I won't be surprised if it staged a little bit of a down move into this area of support, right, before resuming up higher again for oil. So for oil, generally still bullish, right? Just wait for it to come to an area of value, area of support, right, before looking for any long trading setups. Okay, so this is basically it, right? That's all I have for you in this week's market analysis, right? So just a super quick overview. Euro dollar bullish, right, at this point in time since it did the false break recently. Okay, but it might reverse, right, anytime soon. So do manage your trade well. Pound dollar still bearish. We spoke about Aussie dollar. I said stay out, so let's put it as neutral. Dollar Canadian, right? I would say it's slightly bullish, right, since it's forming a build up near the highs. Dollar Sing, okay, we are bullish on this as well. Possible breakout opportunity. ES and Nasdaq bullish, right, for the indices. Gold bearish. Silver, right, I mentioned that possible to look for a false break setup, but the market generally is still in the range, so I just put it as neutral. And oil, last but not least, bullish on this. So this is a super quick overview of what's going on in the financial markets, and that's pretty much it, right? So if you've enjoyed this week's video, right, leave me a comment below, right? Let me know what you think of it, any feedback or comment, and also hit the subscribe button, right, so you'll always stay up to date whenever I publish a new video. Okay, so with that said, I wish you all good luck and good trading, and I'll talk to you soon.